Hello, and thank you for tuning in. On behalf of everyone here at FNBB, I am honored that you have chosen to spend about 10 minutes with me as I explain an exciting new service that addresses a hot regulatory topic and should serve to make your professional life a bit easier and less stressful. With passage and implementation of the Dodd-Frank Wall Street Reform Act, and specifically Section 939A, banks are now being required to analyze and have a thorough understanding of the types and risks associated with securities they currently possess and purchase going forward. With the exception of government-guaranteed issues, this analysis applies to all of your bank securities. As you are probably aware, the sector that is presently garnering the most scrutiny are securities issued by state or political subdivisions, or simply put, municipal bonds. That is the sector that we will focus on today. Recently promulgated regulatory guidance has made it clear that banks will no longer be able to rely exclusively on nationally recognized statistical rating organizations such as Moody's, Standard & Poor's, and Fitch in assessing the creditworthiness of a municipal bond. Banks will be required to perform their own evaluation of individual bonds as well as an assessment of their aggregate portfolio. Historically, pertinent credit information is analyzed and provided to banks at the time of purchase, usually in the form of a pre-purchase memorandum. However, Dodd-Frank stipulates now that banks are additionally expected to perform what could be a daunting task, the periodic and ongoing evaluation of the creditworthiness and suitability of each municipal bond held in the portfolio. The guidance does provide some flexibility, declaring that banks may rely on their own internal systems or analytics provided by third parties when conducting the mandated due diligence. OCC rules and guidance make clear that, quote, municipal bonds should be subject to an initial credit assessment and then ongoing review consistent with the risk characteristics of the bonds and the overall risk of the portfolio, end quote. FNBB can now, through an independent third party, assist you in this process in a very cost-efficient manner. Before getting into the mechanics, let me share some statistics with you. Over the 41 years from 1970 to 2011, Moody's and S&P identified just 71 and 47 municipal bond defaults, respectively. The Federal Reserve, on the other hand, denoted that there were 2,366. The variance is explained by the fact that Moody's and S&P only considered rated bonds, while the Fed measured both rated and non-rated issues. Of all the defaults, research revealed that general obligation bonds and revenue bonds for critical services such as water and electricity seldom default. The highest incidence of defaults occurs in revenue bonds issued for private purposes. Industrial development bonds accounted for 28%, housing projects 17%, nursing homes 12%, and healthcare 11%, for a total of 68% of all defaults. Based on those figures, one might elect, as some analytic services do, to screen a portfolio by issuance purpose. However, there does appear to be an even tighter correlation between a geographic region's economic viability and trends and the credit quality of bonds issued in that area. The final OCC guidance, as filed in the Federal Register in June 2012, makes it clear that banks, quote, understand local demographics and economics, end quote. An evaluation of the economic and demographic strength of a given area is essential to an understanding of the credit strength of any municipal issuer, as these factors translate into revenue streams, expenses, and demand for services. We will briefly walk through that rationale and assessment methodology with you now. To accomplish the screening process, FNBB has entered into a contract with an independent third-party provider. This agreement allows FNBB's customers to utilize the analytics software at a dramatically lower cost while still having the benefit of a third party independent of FNBB providing the service. DIVER is the proprietary software developed and maintained by Lumesis. Lumesis is a software-as-a-service financial technology company based in Stamford, Connecticut. The principals and officers all have extensive backgrounds in the municipal bond arena and developed the DIVER software specifically for the evaluation and analytics of municipal credits. DIVER stores data on over 54,000 issuers in the United States and monitors hundreds of data sets from more than 40 sources. That information is used to evaluate economic trends, demographics, and the financial characteristics of a given geographic area down to the county level. This particular software is used nationally by top 20 banks, mutual funds, insurance companies, and asset managers to evaluate their municipal holdings. We examine every county from which you have a security issued by any entity within that county and run it through DIVER's screen. This is an example of a map depicting the location of municipal bonds in a portfolio. The black dots indicate the position of individual holdings. Through a rigorous screening process, the software is designed to help track the significant drivers of municipal revenues and to pinpoint areas or issuers of concern. The data is designed to be timely and is updated daily when appropriate. As mentioned, there is an identified statistical correlation between an area's general economic conditions and the credit quality of the bonds issued. We have identified 6 economic metrics to use in this analysis. They are changes in population, changes to assess property valuations, unemployment, income, residential vacancy rates, and business vacancy rates. Thresholds were then established for the magnitude of changes or absolute levels to further refine our criteria. For example, a 1% drop in assessed property values may not be significant, but a 10% decline would be. An unemployment rate of 6% might not be of concern, but 12% would be, and so on. Understanding that a county that has a negative trend in one parameter is not necessarily in and of itself worrisome, we have set the alert threshold at 3, meaning any county that fails 3 or more measurements will be segregated for further review. Any bonds that are identified to be from a suspect county will be designated for supplementary review. At that point, we internally review all available financials on any bonds issued in that county and supply the information to you. Using the updated information, you are then equipped to make a determination as to the suitability and creditworthiness of the asset. Additionally, we will provide you with a report by dataset of every county and how they scored so you can review your entire portfolio by county. Once screened, a report is generated showing the specific counties that fail 3 of the datasets and highlights the individual metrics they failed. This slide shows how that data is presented. After the DIVER software has successfully screened your municipal bonds and identified any CUSIPs that warrant additional scrutiny, FNBB will provide you with the latest available financial data on those and every other CUSIP in the bank's portfolio in a concise, user-friendly format. Again, FNBB's research, in conjunction with the DIVER software, provides you with both timely financial information and a robust screening platform to identify potentially problematic bonds. The following 3 slides contain some of the comprehensive financial data you will receive on every municipal bond in your portfolio. This is the issue's description and demographic information. The municipality's income statement, and the municipality's balance sheet. The municipal bond screening takes place once a year, just as you would analyze a loan on an annual basis. But unlike a loan analysis, which is typically done on the anniversary of the loan's origination date, the entire municipal bond portfolio is analyzed concurrently. And while this particular analysis is performed annually, we realize that relevant financial information may be released between your annual reviews. So that you are apprised of any relevant filings that may be disclosed on a municipal bond in your portfolio during those intervals between annual analysis, FNBB can provide through DIVER a continuing disclosure management service. This service will provide you timely notification of any regulatory or financial filing disseminated by the issuer to the Municipal Securities Rulemaking Board through the Electronic Municipal Market Access, or EMA service. You will be immediately notified by email when an EMA alert has been received and can then make a judgment if the filing is significant. After subscribing for this service, you can choose to either receive the notifications directly or have them sent to a designated email at FNBB, after which we will notify you of any alert with an explanation. This is a valuable and important feature to assure that you always have the most recent relevant information available. All incorporated data sources with a description are identified in your report. While we cannot guarantee the accuracy of the data received, we are confident that DIVER has demonstrated the ability to ensure the accuracy and timeliness of all data included. Because of our negotiated group fee structure, FNBB is pleased to be able to make this service available to you at a dramatically lower cost than if you were to contract directly with DIVER, where the annual fee would be significantly higher regardless of the bank size or number of municipal CUSIPs analyzed. By electing to take advantage of FNBB's group pricing, the following price schedule applies: $20 for each rated CUSIP per year, $25 for each non-rated CUSIP per year. For example, if you have 100 municipal CUSIPs, 75 being rated bonds and 25 non-rated, your annual cost would be $1,500 for the rated issues, $625 for the non-rated issues, for a total of $2,125. You then have the option to subscribe to the Continuing Disclosure Management Service. The fees for that service range from $500 to $1,250 per year, depending on the number of municipal CUSIPs in your portfolio. Given the current regulatory landscape, FNBB highly recommends that community banks utilize this supplementary service. We hope this gives you an overview of this exciting new service. Should you want additional information or a copy of this presentation, please contact your FNBB investment representative or call us at the toll-free number listed here. We will be happy to answer any questions. Thank you for your time and ongoing support of First National Bankers Bank, where service beyond comparison is the goal we strive for every day.